Ever pondered about the inception of Bitcoin, the world's first cryptocurrency? In the digital realm, where secrets are as elusive as the wind, the genesis of Bitcoin is one such enigma, wrapped in a cloak of mystery. The story begins in 2008, the year of the global financial crisis. As banks crumbled and economies faltered, a cryptic figure known only as Satoshi Nakamoto published a white paper on an online forum. This 9-page document titled Bitcoin, a peer-to-peer electronic cash system, was the spark that ignited the flame of Bitcoin. Nakamoto's vision was audacious, yet straightforward. He proposed a decentralized digital currency that relied on no central authority, no banks, no governments. Instead, it was a peer-to-peer system, where transactions could be conducted directly between parties, with the whole process backed by cryptographic proof. Fast forward to January 3, 2009. The world witnessed the mining of the Genesis block, also known as Block 0. This was the first block of Bitcoin ever mined, marking the official birth of the cryptocurrency. But Nakamoto didn't stop at creating the first block. He left a cryptic message embedded within the block's code. It read, "The Times 3 January 2009 Chancellor on brink of second bailout for banks." This quote, taken from a headline of the Times newspaper, was Nakamoto's commentary on the financial instability of the time, reinforcing the need for a decentralized financial system. Nakamoto's vision, his white paper, the mining of the Genesis block, and his notorious quote, all these elements coalesced to form the foundation of Bitcoin. They embodied the principles that Bitcoin was built upon: decentralization, peer-to-peer transactions, and freedom from the traditional banking system. Thus, amid the 2008 financial crisis, Bitcoin was born, promising a decentralized future. A future where the power of money was not in the hands of a few, but distributed among the many. A future that, today, we are beginning to see unfold. What do pizzas and Bitcoins have in common? Let's dig into Bitcoin's early years to find out. In the grand scheme of things, you might not think of pizza as a milestone in the world of finance. But in Bitcoin's history, it holds a special place. It all started with a man named Laszlo Hanyecz. One day in May 2010, Laszlo decided he was hungry for pizza. And he had a novel idea. He offered to pay for 2 pizzas with 10,000 Bitcoins. Yes, you heard it right, 10,000 Bitcoins for 2 pizzas. Back then, Bitcoin was still a fledgling currency, and this transaction marked the first known instance of Bitcoin being used to purchase goods in the real world. As time went on, Bitcoin's user base began to grow. The community expanded and developers from around the world started to contribute to its code base. This was a time of great excitement, a time when the potential of Bitcoin began to be realized. In parallel, the first cryptocurrency exchanges were born, enabling people to buy and sell Bitcoins for other currencies. Bitcoin was becoming more than just a hobbyist project, it was starting to look like a viable alternative to traditional money. One event that truly marked Bitcoin's coming of age was the first halving in November 2012. Now, what is halving? It's a built-in feature of Bitcoin's code that cuts the reward for mining new blocks in half. This happens approximately every 4 years, and it's designed to control Bitcoin's inflation rate. With the first halving, the reward fell from 50 to 25 Bitcoins. This event was significant because it put a spotlight on the scarcity of Bitcoin. It reminded people that there will only ever be 21 million Bitcoins in existence. The first halving event had a profound impact on Bitcoin's value. In the months following the halving, Bitcoin's price skyrocketed, drawing the attention of investors worldwide. As the first halving event concluded, Bitcoin had begun to gain a reputation, not just as a digital currency, but as digital gold. From an obscure digital currency to a globally recognized financial asset, how did Bitcoin make this leap? The period between 2012 and 2016 was a roller coaster ride for Bitcoin, full of high peaks and deep troughs. The digital currency, which once moved in the shadows, began to step into the limelight. As its notoriety grew, so did its price. But it wasn't all sunshine and roses. In early 2014, the Bitcoin community faced a significant setback with the fall of Mt. Gox, one of the largest Bitcoin exchanges at that time. This incident left many questioning the security of the currency, causing the price to plummet. But like a phoenix rising from the ashes, Bitcoin managed to recover and regain the trust of its users. As we move towards 2016, the Bitcoin network underwent its second halving. This event, just like the first, reduced the reward for mining new blocks by 50%. From 25 Bitcoins it dropped to just 12.5. This scarcity fueled a surge in Bitcoin's price, pushing it to new heights. But it wasn't only the price that was soaring. The halving event drew increased attention from mainstream media. Bitcoin was no longer a fringe concept discussed in the darker corners of the internet. It was now a hot topic, a buzzword, something everyone wanted to know about. Major news outlets began covering it, and the term Bitcoin started popping up in everyday conversations. The second halving also attracted the attention of financial institutions and investors. They started to see Bitcoin not just as a speculative asset, but as a potential hedge against traditional financial systems. This shift in perception played a significant role in legitimizing Bitcoin's standing in the financial world. By the end of the second halving, Bitcoin had firmly established itself as a significant player in the financial world. It had weathered many storms, proving its resilience and potential to those who had once doubted it. And with this, Bitcoin's journey towards becoming a globally recognized financial asset truly began. What has shaped Bitcoin's journey in the last few years? Let's explore. The period from 2016 to 2020 was a wild roller coaster ride for Bitcoin. It was in this era that Bitcoin experienced its third halving event, a pre-programmed reduction in mining rewards that happens roughly every 4 years. In May of 2020, the block reward was slashed from 12.5 to 6.25 Bitcoins, a momentous event that was met with much anticipation and speculation. In the years leading up to the third halving, Bitcoin's price saw wild fluctuations. From a high of nearly $20,000 in December 2017, it dropped to just over $3,000 a year later. But the resilience of Bitcoin was not to be underestimated. By the end of 2019, it had bounced back to around $7,000. This period also witnessed an increased institutional interest in Bitcoin. Traditional financial institutions and investment firms started recognizing Bitcoin as a legitimate asset class. This was a major step forward in the mainstream acceptance of Bitcoin, and it brought a new wave of investors into the market. Meanwhile, Bitcoin mining continued to grow, both in terms of the number of miners and the complexity of the mining process. Despite the halving of the block reward, the lure of Bitcoin kept miners, both old and new, firmly in the game. Then came 2020, a year that will be remembered for the global COVID-19 pandemic. The world economy took a hit, but Bitcoin surprisingly thrived. As traditional markets plummeted, Bitcoin saw a surge in value and acceptance. The pandemic underscored the need for a decentralized digital currency, and Bitcoin, with its inherent qualities, fit the bill perfectly. In a world turned upside down by a pandemic, Bitcoin shone as a beacon of financial resilience and innovation. From a mysterious white paper to a globally recognized digital asset, how has Bitcoin evolved over the years? In its nascent stages, Bitcoin was nothing more than an intriguing concept, born from a white paper published by an anonymous entity known as Satoshi Nakamoto. It promised a decentralized currency, free from the control of governments and financial institutions. Yet it remained largely obscure, known only to a small community of tech enthusiasts. As we moved into the early years, Bitcoin began to show promise. Its value started to grow, albeit slowly, and the world started to take notice. The first halving event took place, cutting the rewards for mining Bitcoin in half. This scarcity sparked intrigue and drove up the value, marking the beginning of Bitcoin's journey into the mainstream. The years that followed saw Bitcoin's rise to prominence. The second halving event took place, further driving up its value. This period also saw global crises, like the Greek debt crisis and Brexit, which further demonstrated the potential of Bitcoin as a safe haven asset. In the recent years, Bitcoin has evolved from an obscure digital currency to a major financial asset. The third halving event took place, sparking a bull run that saw Bitcoin reach unprecedented heights. Despite periods of volatility, Bitcoin's value continued to grow, attracting the attention of major financial institutions and governments around the world. Throughout its evolution, Bitcoin has shown resilience, weathering numerous challenges and crises. Its journey has been shaped by the halving events, which have played a crucial role in driving its value and popularity. But perhaps more importantly, it has been shaped by a global community of believers, who have continued to support and invest in this revolutionary technology. Bitcoin's story is a testament to the power of innovation and the relentless pursuit of decentralization. It's a story that continues to unfold, promising exciting times ahead for the world of finance.